G'day ladies and gentlemen, and welcome back to another Bitcoin update. We're here on Bitcoin. You can probably hear in my throat a little bit of nasaliness. I am a bit sick right now, and I have shaved my neck as well, so I look like a 13-year-old boy, so excuse both of those things. But before we get into it, I do need to quickly give a reference to the fact that tomorrow we have an important video coming up. As you guys know, we have the banking crisis kind of going on in the United States of America right now. Pac West has had a very, very bad daily candle. We know First Republic, I think it's First Republic Bank as well, has had FRC, that's Vatica for it, has had a very bad candle as well. And so, this is obviously going to have some effect on the market. It's obviously having an effect on Bitcoin. And as Bitcoin comes together and correlates with gold more and more, we can actually see that this crisis is outlining and highlighting a durability in Bitcoin, right? That has not kind of existed before. It's actually proving Bitcoin to be a successful asset. So it's great to see, and we'll discuss that tomorrow. Just keep that in mind. I know what's happening right now. We'll discuss it tomorrow. It's a very important video, so you don't want to miss that. But today, we've got an important video as well. We've got the FOMC decision, guys. That is in 13 to 14 hours. 13 and a half hours is right now. By the time this gets out, maybe 12 and a half, right? And so essentially, we have an 86% chance of one more 25 basis point hike. We have a 13% chance of no more 25 basis point hike. So obviously with things like FOMC and inflation rates to kind of clarify, all kind of government data releases, what you generally see is that if you see lower than expected, it's bullish. If you see higher than expected, it's bearish. So if we see no more rate hikes, if we see them not choosing to raise rates any further, that's going to be very, very bullish for the market. If we see them hold and maintain at 25 basis point hike as expected, that's going to be neutral. And if they raise by 50 basis point, that's actually going to be very, very bearish. So look, when it comes to data like this, when it comes to rate hikes, when it comes to inflation releases, it's not about the actual reading itself, because that's priced in already, right? It's about whether it's higher or lower than the expected reading. So we'll be waiting and seeing here. The chances are we'll see a 25 basis point hike, and if we do see that, it should see pretty neutral price action in the market. And that doesn't mean we go sideways. It just means that whatever was going to happen happens naturally, and it just accelerates a bit. We will see volatility come in, and that's why I'm making this video. There will be volatility today, so watch out for that, and that's why we need to outline the key levels for Bitcoin. But before we even get into that, we can note that historically speaking, each pink line marks a macro bottom on the S&P, the orange line is the inflation rate, and the white lines are the S&P 500 price chart. Historically speaking, the S&P 500 has only ever bottomed out when interest rates are on the decrease. Now, interest rates will be topping, okay? 25 basis point hike, that will be it most likely. They'll be topping. So they'll start declining in probably a few months, okay, at the minimum. So S&P 500, if it's going to go down, it better bloody start moving down. Okay, that's the whole thing I've been saying. Everyone keeps claiming that the S&P 500 and NASDAQ and all that, when I say S&P 500, I mean markets in general, right? Everyone keeps claiming it's going down. Well, if it's going to go down, historically speaking, it should already be going down, and it should start right bloody now, because rates are pretty much topped out, and they're going to start decreasing soon, and when they start decreasing, that's when the bottoming zone will be. And it's still 20% up from the lows, and it's been bottomed out for over 6 months. So I'm not entirely concerned with the actions of the S&P 500 at all, because now we have proven that Bitcoin is more correlated to gold than it is the S&P 500, and gold is only loosely correlated to traditional markets. I'm actually just saying, just purely as an observation, to everyone who's saying it's going to drop to new lows, it better start moving down, because it's been bottomed out for 6 months, and we're almost in the bottoming zone. So it will be very interesting to see how the S&P 500 reacts. Now, what I will point out to you is this, okay? I'm not saying it won't go down further. I'm just saying this. This is the first time we've ever seen, if you look at what's happened here, this is the first time we've ever seen rates being that's not a word. This is the first time we've ever seen them raising rates. Okay, English. When the market is going down. We've never seen that before, okay? If you look historically, they only ever bring rates down when the market is going down. And this is because they want to ease the blow, okay? Now, right now, they are raising rates as the market generally moves down, even though it's been bottomed out for the last 6 months. Now, on paper, this will make it worse, right? You'd think, right? But at the end of the day, they're doing something they've never done before. And so we can't expect the same result. And so maybe, just maybe, the S&P actually is bottomed. I don't know. I'm just pointing it out there. This is the first time they've done something. If you're looking at a trend, you have to have the same sets of data. You have to have the same, if you're trying to take a trend like this, which is the S&P 500 only bottoms out when rates are going down, right? And you're trying to extrapolate that data, you better have the same components making up that data point if you're going to go ahead and extrapolate it, if you understand what I'm saying, right? You have to have the same characteristics. Right now, we don't have the same characteristics. The S&P 500, in relation to rates, is doing something it's never done before. Perhaps we get a different result. Perhaps it doesn't go down to new lows. We'll just have to wait and see. So it's not, what I'm saying is it's not as textbook as some people have you believe. It's not like, oh, it's going down for sure, because this is the first time we've seen them do this. We don't really know. It's the first time ever we don't know. So that's interesting, but I thought I'd bring that up in regards to FOMC. Now we can actually get into Bitcoin itself. Look, I'm not going to go ahead and say the market looks amazing. It doesn't. I mean, we're seeing this 28.6K level that I don't have the weekly chart up for right now, but essentially on a daily chart, you can go ahead and see it. This pink line, right, that held us up during the entirety of 2021, 2022, and even 2020. We're seeing that kind of lose its relevance because we've jumped up and down above it, twice now. We're on our second time. And even on the daily chart, we're over here, we're kind of testing it for support right now. But, the more you jump up and down above a line, the more messy it gets, the more wicks you see, the less importance that line has. And I think that's what we're seeing. I think we're seeing 28.6K lose its relevance here on Bitcoin chart. Now, obviously, it still is a support zone, it still is a resistance zone. If we went into short-term charts, we can see that it very clearly does act as support and resistance. It's just not as strong as it used to be. And so I think we need to look at some other means of analysis. And that's why I've gone ahead and I've actually drawn up, as you can see, this new, in the bold yellow, triangle formation. Now, what is this? It's a bullish pennant formation, okay? Now, what that means is that Bitcoin has gone upwards into a triangle, okay? And when that happens, you usually see a bullish pennant formation, and that usually breaks to the upside. So perhaps we see another move to the upside, but ultimately, what you need to be looking at right now in Bitcoin is this freshly found bullish pennant formation. Whether we break to the upside or the downside is irrelevant. The fact of the matter, that is the structure, and the structure is generally bullish. So generally speaking, even though we're seeing some exhaustion, even though we're seeing 28.6K kind of lose its relevance, we are still in a bullish structure, and we are still holding, quite critically, the 50 EMA, which is this blue moving average here. We held it on these lows here in April, and we're holding it again in these lows here in early May. So that's good to see as well. As of right now, there's no real reason to be concerned. Perhaps you can keep more of a close eye, more of an attentive eye on the charts than you have before, because we are seeing such stagnation. But ultimately, we're still in a bullish structure, so it's not really cause for massive concern at this point in time. So that's the structure I'm looking at, that bullish triangle formation. If that was to break to the upside, it would likely take us back to the peak here, at around 31.3K. And if we're going above that, the next real resistance zone, if we're looking back historically, and this is better identified in the weekly chart, is around 36K, somewhere around there, 38K, somewhere in that price region is probably the next major resistance level. So this triangle could take us up to the peak of this local range, and then from there we'd have to make a decision as to whether we will go upwards again for another surge upwards to this region here. But that's something we can discuss at the time. We can't really discuss it right now because we don't have the relevant TA to support a move to 36K to 38K right now with this triangle available. But yeah, that's it. That's important to note. Look, we are still in a bullish structure, as I said. There's nothing to be overly concerned about. Yes, this exhaustion is something that you should be paying attention to. I think that the FOMC decision, look, here's the thing, right? This triangle, okay, and we have these other micro lines you can probably see on the screen here that are, pushing up against within this triangle and acting as resistance and support within the triangle. If you're looking at the 4-hourly chart, you can see that, right? These dotted lines clearly acting as support and resistance. But, this triangle as a whole, the overall compression range is actually only stemming from around 27.2K up to 29.7K. So that's only a 2,500 USD range, about a 10% range. And so essentially we could actually be seeing, it's not unusual to see a move that big during FOMC. We could potentially even be seeing this triangle break to the upside of a downside today on that FOMC release. Especially if the data comes out and it's not what we expected, especially if the rate hike is smaller or larger than we expected, or it's just not even there at all. That could lead to a significant move. We'll have to wait and see. And that's one of the reasons I'm making this video today. I'm pointing out this triangle so you can keep an eye on it when FOMC occurs. So yeah, that's important. I think that, we discussed yesterday, guys, gold has this uptrending line, this massive triangle formation itself, and this massive resistance line. The uptrending line we're looking at right now and the upper resistance band is about 3 years old, but the triangle itself, this uptrending support line, is just a couple of months old. Yesterday and many, many days before, we were on major support there. I said that due to the correlation between Bitcoin and gold, we're very likely to bounce on gold and we're very likely to bounce on Bitcoin. We did go upwards, and that's probably one of the reasons why. As you can see, Bitcoin saw a green candle and gold saw a green candle. This correlation is growing stronger and stronger, which is good to see. You know, 4-hourly chart as well. If you want to look at something with FOMC, you want to potentially take a trade, you can take a look at this downtrending yellow line in the RSI. It's compressing us, and you can take a look at this upper dotted yellow line, right? That stems back all the way from October 2022. Wait for the chart to load, as you can see there. And you can wait for a break of this RSI 4-hour line, and if that break lines up with a break of this dotted line, you could take a trade up to the top of the triangle. That would be an ideal trade for FOMC if we were to move to the upside. I don't really see any ideal downside trades at this point in time. Potentially, you could utilize this lower dotted yellow line, which stems back, as you can see. Let me go ahead and show you from this little peak this little low we saw in the 12th of March. So that's another thing you could do there for the short-term trades of FOMC. That's probably what I'll be looking at quite closely. S&P 500 on the short term, we'll get into that tomorrow when we look at the banking crisis and its relation to Bitcoin and gold. That's something I'm very excited to look at, guys. But ultimately, I hope this video was useful. Look, you know, overall, I think another thing we can say is total cryptocurrency market cap is at resistance still. It's dropped below its support zone. It's formed as resistance again. The charts are just really messy right now. I think that's the overarching point I'm trying to get across. The charts are really messy. FOMC could clear something up. Overall, at this point, there's nothing to be overly concerned about. We are still in a bullish structure. We just have to keep an eye on that triangle formation. That's all I can really say about Bitcoin at this point. And we'll update you with FOMC tomorrow or the day after that video I'm posting tomorrow, but I've mentioned a few times in this video. So hope you guys found it useful. I know it's not really a predictive video. It's kind of just an update of what's going on, but I think it's useful regardless, guys. So thank you for watching. I hope you enjoyed it. Check out the BitGet exchange, guys. 5 times lower fees than Binance, non-KYC. Sign up using my referral link in the pinned comment below or the description below for a 15% trading fee discount for life. Check out the Crypto Academy if you want to learn how to trade. All the information is on the website below. It's a course that takes you through many steps to learning how to trade, takes you through all the steps of analysis, everything you need to know really to become a trader. And finally, check out the VIP group. We post altcoin trading signals in there. 100 USD entry fee for 3 months of entry. So that's about $1 a day, which is really good deal, to be honest with you. And we've posted our results in there. You don't need to take my word for it. You can check out our previous trading results. 6 months worth of trading results from all of our trades, our wins, our losses. It's all there. Check it out, guys. Thanks for watching. Hope you enjoyed. Catch you in the next video. Cheers.